Welcome, it's Denome, and welcome to this crypto update. Now, yesterday was one of the craziest trading days I have ever seen in my life. As you can see, the S&P 500 index went up basically from the start of the day until the close, roughly up 10%, which is one of the highest trading days in its history. Now, I know I have been quite bearish in my videos in the last couple of days, but I actually spotted a buying opportunity which I shared in my free Discord group. So I said that this looks to be a double bottom for Bitcoin price. Right now, I saw it in the chart. This was actually a Fibonacci retracement level as well. From my previous video that I shared, I'm using the same Fibonacci sequence, but also I saw that there was $150 million more spot limit buy orders than there were limit sell orders within a 3% price move from the current price point or from this price point. Another reason why I was confident to share this local bottom idea was that there was more buying happening in this bottom here than there was actually buying at this bottom here, which signaled that there had been increased demand for Bitcoin at that price point. So I shared this idea basically when Bitcoin was $75,000, and from there it went to $83,000. So congratulations to everybody who was able to catch this move. Now, going to the analysis here, in this video we will analyze basically, is this simply a relief rally, or will the price continue to trend to the upside and potentially go even for new all-time highs in the future. Also, we will analyze what the hell actually happened with the tariffs, what was the point, and we're going to look into the complexities of the world economy as well, and potential side effects from these tariff policies. So it's going to be a little bit longer video. I will put timestamps below, but now let's actually get to the analysis. So first off, let's talk about what actually was the catalyst for this price move, which was obviously when Donald Trump said that he was going to give tariff relief. So now the new tariffs, the new policy from Donald Trump is that there's going to be a 90-day pause on all previous reciprocal tariffs, and there's going to be a blanket 10% tariff against all countries except China, which will enjoy a 125% tariff on all goods coming from China into United States. And also China has made its counter tariffs for goods coming from USA into China. On top of these, which is not mentioned here, I do believe that Canada and Mexico are still experiencing a 25% tariff, because those tariffs were not reciprocal tariffs. Those were tariffs because of the fentanyl crisis and the illegal immigration crisis, and maybe some other reasons that we don't know about. But all in all, most of the tariffs are 10% and potentially 25% for Mexico, Canada, and 125% for China for the next 90 days. So between now and 90 days, there's plenty of potential new fears that might arise, because this is still uncertain how these negotiations play out within the next 90 days. So there could be still some volatility ahead based on obviously how the negotiations go and whatever Donald Trump decides to say. Now, before analyzing the tariffs themselves, there's a couple of points I do want to make that I think are significant, not necessarily important, but I think they are interesting. So first thing is that Donald Trump actually shared this idea 3 hours before the tariff relief. He said, "This is a great time to buy DJT." Basically telling everybody that, hey, I have a plan, the markets are about to pump, now is the time for you to buy, which is a sign of market manipulation. Also, if we take a look at the actual analytics behind this price move, or what happened before the price move, you did see something very, very interesting behavior. And I'm not going to go through all of these because it's just details, but basically there was definite insider trading going on, which in my opinion makes a lot of sense. Donald Trump wants to reward the people in his inner circle and who are pushing this pro-tariff narrative, So most people in his inner circle most likely were absolutely buying these stocks at the lows there, knowing exactly what was about to come. And based on the smiles from everybody after these announcements, I do believe that they got filthy rich from this price move. So Donald Trump was insider trading. Another interesting point is here. Donald Trump says that there's a 90-day pause on all tariffs and a blanket 10% tariff for countries who did not retaliate in any way, shape, or form against the United States. But this is a lie, once again, because there were countries that retaliated. For example, European Union said that they will give a 10% counter tariff or even a 25% counter tariff for US goods on the same day that the tariffs were lifted. So Donald Trump is basically lying here. And if I was China, I would read this as an act of war. Uh, because if Donald Trump is basically lying, what people and other countries were actually doing is just basically trying to put China in a bad light, which is not what the Chinese people like. So anyway, that's just some nuance there. But now let's actually talk about the actual effects of these tariffs. Have the fundamentals changed? Now, in my opinion, the fundamentals haven't really changed. These tariffs are still inflationary and they are still paid by the American consumers and American businesses. So when we take a look at Canada, Mexico, and China, and we take a look at their weight in the imports into United States, they basically represent 50% or 45% of all imports going into United States, and these still have high tariffs. And all of the rest of the countries also still have that 10% tariff. Now, let me give you an example what could happen for prices in the United States based on these tariffs. So let's say there's a company that imports I don't know, a phone from China, for example. Now, there's a 125% tariff on that phone when it arrives in the United States. So the $100 phone that was the price in China, now the retailer has to pay 225% for that phone. And if he wants to sell it for consumers, let's say previously he sold it for $150. And if he wants to have that same profit, $50, he will have to sell that $150 phone for $275, almost double the price. Now, if he wants to have the same profit margin, which is 50% in this case, then obviously the phone will cost even more than just 50%, basically all the way to 75%. If they import components from China and they assemble something in the United States and resell it to United States people, then they will also increase or experience price increases. So all of these tariffs are still inflationary and they hurt American consumers and they also hurt American businesses. So in the short term, I don't really understand this relief rally because fundamentally speaking, these are unprecedented tariffs that have been placed on the people and businesses of United States, and it's basically hurting the profits of American businesses and it's hurting the purchasing power of American consumers. So overall, I'm expecting less economic activity in the United States, and less economic activity means a recession is more likely. So from that front, it does not look good in my opinion. But there's some other nuances that I do want to talk about. Now, let me play a clip from Scott Bessett. It's a little bit a longer clip, but I'm gonna play it throughout. You can skip it if you want, just for my analysis. But I think it's very telling for what the goal of these tariffs actually are. This was released 5 days ago, but let me play you the clip. It reveals something very, very interesting about this whole situation.
What could happen if you were to say, Scott, look, what's the dream scenario? That somehow there could be a deal where the US and China, we want more manufacturing, which would mean smaller part of the economy's consumption. The Chinese have this imbalanced economy with too much manufacturing, and actually the Chinese consumers really get the short end of the stick. So Chinese households, they're called in what's called the middle income trap. That could we do something together to say, okay, you rebalance, you consume more, manufacture less. We are going to consume less and manufacture more, and we'll be military rivals. There'll still be an economic rivalry, but we're going to level the playing field by a lot. Now, that's not going to happen tomorrow. That's not going to happen in a month, but over the next few years, they may have to come around because I think their business model is broken. I think President Trump's broken their business model with these tariffs.
So you're describing, the famous scenario where if you take a bank loan, the bank is in charge. They can repossess whatever you borrowed against. But if you take a big enough loan, you're kind of in charge of the bank.
Exactly. And they've just got such a big deficit with us that
they need our markets.
They can't survive without them.
That's the clip. So there's a couple of points from that clip that, in my opinion, are very telling. Number one, the stated goal that United States wants a surplus or a trade balance. In my opinion, that is still also the goal. And if you watch my previous update video from yesterday, I said that that is an unrealistic goal because every single time United States tries to have a trade balance or trade surplus, it leads into a recession. And the reason is United States is not the same country it was 100 years ago. Now, United States dollar has the reserve currency status, which means that there's dollar demand outside United States, which is unprecedented, which was not the case when they previously had tariffs, or when United States government was massively financed with tariffs. And obviously the government size was also lower. So as a reserve currency of the planet, it means that when there's demand for dollars outside the United States can simply print more money to import goods from other countries. And that's how the economic wheels work. But when there's a trade balance or a trade surplus, suddenly those dollars outside the United States start flowing back into United States. And that causes a lot of problems, bankruptcies, and basically uncertainty outside the United States, because money is not going to those companies where the goods are actually made. And it doesn't really make sense for United States to become a factory of the world anymore, because China just does it much better. They have the robotics, the people, motivated and skilled workforce, whereas United States citizens, I don't think they would like to do 12-hour factory shifts, which means that manufacturing in USA is simply much more expensive unless you invest heavily like Tesla has in robotics, which could help basically alleviate the problem. But just most factories just simply doesn't make sense. Like if you make socks or shoes or something like this. So anyway, that was the first point, that they do want the trade surplus, trade balance. The second point from this clip is that Bessett thinks that they can hurt China. And they can basically, China cannot survive without exporting into United States. So let's actually examine that point. So this is how much of the goods that China produces are actually exported into United States. And those are only 15%. So let's say this drops by half and it goes to 7.5% in the future, because there's still stuff that you really cannot buy anywhere except China. And the tariffs, even though they are very high against China, it's just better to buy it when you know the stuff that they make there is good quality, it works with your whatever you want to manufacture. So let's say this drops by half. In that scenario, China only loses 7.5% of its exports. And you can bet that the exports into these other countries will go up. And one of the clearest winners, in my opinion, in this whole saga is Russia, because this is pushing China closer to Russia, and Russia already decoupled from the dollar trade. So there's no tariffs against Russia from United States because there's practically no trade between those two countries. So Russia just suddenly has access to cheaper goods from China. And obviously, all of these other countries also have access to cheaper goods, cheaper manufacturing, and all these things. And another point is that China can basically go around these tariffs by, let's say, they send the stuff to a country like, I don't know, Germany or even Pakistan or, I don't know, Argentina, for example. And once the stuff from China is imported into Argentina, the label is changed and shipped into United States. So there's a switcheroo there to basically bypass these high tariffs. And I'm sure they are able to do that just as well as Russia has been able to bypass the sanctions placed against them. So there are ways that China basically can uh, mitigate the blow from these high tariffs that United States has placed against China. Also, you have to remember the Chinese spirit, which is that even during the communistic era when Mao was in charge, there was no revolution basically. Everybody basically just hunkered down and did whatever the supreme leader told them to. Now, China is much wealthier. Everybody is doing better off. They respect the leader, and there's basically no chance for a protest. And even if you ask Chinese people how they perceive this new these new tariffs, most of the people, even though a couple of percent of the population is affected by this tariffs directly, most of the people don't really care. So it's very unlikely that there's going to be massive unrest in China. Now, I could be completely wrong here, and Bessett might be right, but that's just my take, that they don't have as high of a leverage against China as they do, because at the same time United States is also hurting itself. It is hurting the companies that want to import stuff. They are hurting the American consumers who want to buy cheap goods with these tariffs as well. So it's basically hurting both countries. And if China can see that it hurts United States, but they can increase trade with every other country on the planet, they can see that they can make United States weaker. At the same time, they become stronger everywhere else on the planet. I think China will take that deal 10 out of 10 times. That's just my take there. And I'm not saying that China is a good country or anything like that. I'm just saying I don't think United States has the leverage against Russia or China as it thinks it has. And we already see how big of a mistake they did before with Russia with the sanctions, which basically simply increased the GDP of Russia and helped it basically decouple from that from the US dollar trade. So I think that they are making the same exact mistake here again. But that's just my take. I could be wrong here. Let's continue. Going basically out of the... Actually, I do want to say one more thing before I talk about Bitcoin, which is that when we go and take a look at the bond markets, the bond markets are basically breaking down. So when we take a look at the 10-year treasury yield, sorry, this one. The usual thing that happens during uncertainty is that the 10-year treasury yield goes down. And that's basically what we saw from March until basically when the tariffs were implemented. When there's uncertainty, the yield goes down because there's demand for government bonds. But the opposite basically happened with the tariffs. The bond yields went up. And there's a couple of explanations why this happened. I already explained it in a previous video. The first thing, which is that inflation fears is fueling the yield rates to go up. Because if people fear inflation from the tariffs, then they don't want to bid a lower yield on the government bond. If they think inflation is going up, they want higher yield for the government bonds that they buy. which is basically forcing the yield to go up. Now, as the tariffs have been rolled back a little bit, we can see a small dip in the government bond yields, but not a high dip, basically from yesterday. Just a small blip here. So right now, the bond market is kind of telling that we still expect more inflation. That seems to be the case, in my opinion. It's just a small relief so far here. The second reason why this spike to the upside is that there is a dollar shortage on the planet. And when there's a dollar shortage on the planet, it manifests in a couple of ways. One is that the bond market doesn't do what it is supposed to do. When there's uncertainty, like I said, the yield should go down, but they went up. That is a sign that perhaps people are basically selling their bonds and they want dollars instead. And why would they want dollars is because there's a dollar shortage. And how this manifests in other forms is when we take a look at the price of oil. The price of oil basically tanked completely when the tariffs came into play. This is one other signal that there's a dollar shortage. A couple of other signals that we can see is obviously when we take a look at the repo markets. This is basically how much treasury securities are sold by the Federal Reserve in temporary or open market operations. And these are basically hitting record lows since then when these were implemented in 2021. This is a sign of liquidity drying up. Another one is this one here. So when we take a look at basically the spread between the bond yields, the spread between all of the different bonds is up, and it basically did not come down at all. Again, signaling a dollar shortage. And when we take a look at the longer view from here, you can see 2022, these spreads also spiked. And this was basically when the stock markets were crashing and also when the crypto markets were crashing in 2022. Previously, when these were spiking, we can see the 2020 market crash basically was before that market crash, we already saw this massive spike going to the upside. And in 2008, you can also see that these spreads also went way, way, way up. So I'm not saying that there's an immediate risk of a market crash, but I'm saying that this is a signal that the system is having problems. And right now, what Donald Trump is doing with the tariffs, if they want a trade surplus, the dollars will flow back into United States, which means there's another dollar shortage outside United States. And as there's a dollar shortage outside the United States, that can cause illiquidity between banks. The collateral is not shifting as well as it should, and that can cause basically illiquidity in the markets. And when there's illiquidity, that can cause banks to basically fail and get bankrupt. So this is a systematic risk that we're currently, or United States is playing with. And I don't think they have taken all of these different things into account while they are playing this tariff game and as they are trying to get a surplus or a trade balance between other countries. I think we are headed for a wave of bankruptcies eventually if they stay the course. Now, obviously, this is just speculation and these are just different indicators that we're looking at. But I think there's a real possibility that these trade wars continue to escalate, and it's not gonna be good for the global markets. Now, before I talk about Bitcoin, I want to make this final point, which is that as the money is flowing from outside United States into United States in the forms of new investments, in the forms of new factories in United States, pledges of money going into United States, and as the tariffs are now placed, this is a inflow of capital flowing from outside the United States into United States. The stock markets might actually have a rally because of all of the capital flowing into United States. So we might see basically like a blow of top in stock markets from this money going back into United States. But at the end of that blow of top, there's gonna be a massive crash basically because suddenly there's not money outside the United States, and that's when they have to turn on the money printers. Now they could do it proactively and just turn them on and issue money across the planet. But then my question is, if they want to do that, why are they playing with this tariff stuff? Why just don't flood the market with cheap capital and with dollars? So this tariff play seems to be in its own thing completely. Now, let's finally start talking about Bitcoin, because on that front, we do have some good news. So first of all, Van Eck, which is a ETF company, and one of the ETFs they issue is a Bitcoin ETF. They have now confirmed that China and Russia are officially settling some energy trades in Bitcoin because of the trade wars. So China and Russia have reportedly begun settling some energy transactions in Bitcoin and also some other digital assets. I don't know if that's maybe a digital RMB, or I don't know what that is, but they're saying that Bitcoin is one of those assets. So this is again cementing the fact that Bitcoin is becoming an asset in the global trade. Also, they are talking about French energy utility EDF is exploring whether it can mine Bitcoin with surplus electricity currently exported to Germany. Again, Bitcoin is becoming it's cementing its place as a world asset, an asset that people want. Another good thing that I saw here is world's largest credit rating agency, Standard and Poor's. They are saying that Bitcoin is becoming an uncorrelated asset, and it could actually be a great hedge against currency debasement, as most likely the governments and countries will start printing more money as a result of this tariff wars to supplement the liquidity crisis that the world is currently facing. So Bitcoin against that is a great hedge. So we are still seeing basically more adoption for Bitcoin. But in the short term, when we take a look at what ETFs are actually doing, we have seen more sell pressure during this downturn here. So here we have basically on the 3rd of April, we saw $100 million outflow, $65 million outflow, $110 million outflow, $326 million, and yesterday we saw a minus $127 million outflow. So the outflows from ETFs have still been rocking, but when we go and take a look at sentiment.net and we look at on-chain data, let me actually refresh this. We did see some people basically at the lows here taking Bitcoin out of exchanges and utilizing the bottom here, basically showcasing that some people are just wanting to take Bitcoin out, and whoever wants to sell them at a low price, they will happily snatch it. And then, unfortunately, the stablecoin market cap has gone down roughly $1 billion since I last flashed this metric here. Obviously, we do want the stablecoin market cap to go up, and I do believe that it will go up as the need for United States dollars grows, and the one of the liquid ways to use United States dollars is obviously the stablecoin market. So I do believe that will continue to go up. There's simply a small downturn there. Now, who has been selling here? Unfortunately, we have seen some spikes in the blue line here, which signals that wallets that have held Bitcoin for more than 3 years have actually been doing some selling here. Also at the lows here, we saw a 33,000 Bitcoins being moved from a little bit older wallets as well. So some old wallets basically were capitulating here, but a good thing in that capitulation is that when we take a look at network profit or realized profit, we do not see high spikes in a network realized profit. And in fact, we did see even a negative number here, minus $26 million of realized profit, which means that some people are now selling Bitcoin at a loss, even on average. And this is usually a time when Bitcoin might actually have a bottom. So this is great news that it is basically just capitulation, but overall the incentive to sell at a profit is going away right now. That is extremely good. Bitcoin supply distribution cannot really see any interesting trends here. Basically, most of these are pretty flat. Cannot see whales accumulating or not accumulating. Well, maybe one thing I can comment is the biggest whales, the blue and the red line, they have been doing some shenanigans here at these lows here. You can see the 10,000 Bitcoin wallets, they were basically accumulating Bitcoin and then dumping them on that market pump. And then they basically were starting to buy when the Bitcoin price was low. And right now at the TPD top here, they started to sell at this local top as well. So some market, I don't know, manipulation or some form of trading is going on with the largest whales on that front. Then when we go and take a look at the spot order book depth, right now, like I showed you before that we saw, or I saw that this was probably a double bottom here. Right now we are seeing sell pressure in the limit sell orders. If I change this to 3% at the top here, there was a $110 million more sell pressure from spot market, and $250 million sell pressure from futures markets. And when we go and take a look at the liquidation heat map, basically most of the liquidity of short liquidations are basically going all the way to $86,000. This is the next liquidity pocket that is, in my opinion, interesting. There is some liquidity starting to pile up basically below $75,000, $74,000, but that's not a lot, at least as of now. So most of the liquidity is basically up above here. So we're getting some mixed signals on that front. Now, going into Bitcoin and talking about a potential price move right now, first, I do have to acknowledge that we have broken this trend line here that we have been looking in the immediate vicinity. And basically, this pump here is simply a retouch of that trend line from my perspective. We have not broken above it. Now, Bitcoin has to decide if it wants to continue to the upside or not. But right now, this is an extremely risky territory to actually buy Bitcoin, in my opinion, because as we saw, there are now sell pressure from the people who think that this is simply a relief rally. And what I do expect is that we have a pullback here, maybe even back to 78K. And from there, Bitcoin has to decide if it wants to go and liquidate that 86K or not. If it does, then we might see that Bitcoin establishes itself on top of this trend line here, and also on top of the previous trend line that we saw. If it does something like this, this would be great, obviously. Once we have that, then I expect basically everybody to get bullish again. But right now, at this price point, it doesn't make as much sense. It's much better, in my opinion, to wait until we are basically confirming that we are above the trend line once again. Right now, there's a lot of risks, uncertainties, potentially a liquidity crisis in dollars where investors are looking for dollars to hedge against the outflow of capital from outside United States into United States. Those companies and companies and countries and banks outside United States, they want to have dollar reserves when they know that their countries will start issuing money and debasing their currencies. So for that reason, dollar will probably continue to go up for a little while. So it's very hard to predict exactly what's going on right now because it's so whimsical, everything that is going on in the United States. So I'm just giving you a scenario that is I don't want to get bullish yet because we are not established basically on any of these important trend lines. So for that reason, I basically expecting more downside. 78K, I would be happy to take a long bet here, but even if we go lower, let me show that scenario next. So previously, I showed you guys this Fibonacci sequence. This was, by the way, one of the reasons why I thought this double bottom would hold, because we got basically a perfect bounce from the Fibonacci price point here. Is it accurate? It's roughly accurate. So that was a touch of this Fibonacci line. It was also a touch of this previous high here and this support level. So it would make sense that we got a bounce from there. Now, if we go to 78K and then we go on top of here, that will be great as well. But keep in mind, there's another trend line to look at. And I haven't shared this before because it really hasn't been relevant before this. And that trend line, I will use this Fibonacci line to basically show it, is right about here. So this trend line is basically just a touch of these lows and these lows here and a continuation from there. And there is a potential, if we see a liquidity crisis or a scare of liquidity crisis, where Donald Trump basically has to say like, okay, now we need to do emergency spending or whatever, $67,000 roughly. This is another liquidity pocket because it's almost at the center here. If you draw a volume profile here, this is a hot zone for previous liquidity. Also, it is basically the trend line here from this price level. So 67K would be like an amazing buying opportunity if we go there. But it's hard to say exactly how Bitcoin will behave right now. I'm just giving you some scenarios because I'm basically seeing both scenarios like 50-50 right now. I don't know which way Bitcoin will go. Eventually, it will obviously go to the upside. Donald Trump will have to turn on the money printers and we will fly again. But right now, it's quite risky right at the next to these basically these trend lines and these resistances. So my best analysis for Bitcoin and crypto markets right now is to exercise caution and maybe even wait a little bit and maybe wait 1 week and then we have more information from that. But if you already want to trade these markets, if you want to long, if you want to short, if you want to help this channel, you know that I'm sponsored by Phemex, where you can short, you can long, you can do basically anything. This is my affiliate code that helps me to basically benefit from your trading, and also you're eligible for nice welcome rewards, their trading competitions, and even if you just want to trade, learn trading, you don't have to do any KYC to open up a demo account on Phemex as well. So it's completely free to get started, and you don't have to do KYC to actually get started with trading on Phemex at the moment if you use my code as well. One of the reasons why use this platform here is obviously their very, very low fees on derivatives trading. So that's it for this update. I hope you got some value out of it, and I'm sorry that I don't have a clear picture exactly where Bitcoin will go in the immediate short term. But have some cautions, have some patience, and thanks for watching. I will see you on the next one. Bye bye.